I went in, I learned Bitcoin before I learned Keynesian economics.
Yeah.
And so
that's amazing.
When someone says, oh, inflation is 2% because that's how it is, I didn't have that sort of preconditioning.
Dylan LeClair is the director of Bitcoin strategy at Metaplanet. Before stepping into the corporate arena, Mr. LeClair, was the head of market research at Bitcoin Magazine and a senior analyst at UTXO. That's all well and good, but Mr. LeClair also has a magnificent head of hair that makes balding men like myself and balder men like our French live stream operator gnash our teeth and ball our fists. That aside, I've wanted to speak with Mr. LeClair for some time, and I finally get to do so. Let's get to it. All right, here we are. Dylan LeClair. Nice to meet you, sir.
Nice to meet. I'm happy to be on the show. Thanks
Great.
for having me.
Very, very nice. To start with, can you please give me a brief history about yourself? What led you to what you're doing here today?
Yeah, I can't say I had some grand master vision. It was sort of a lot of a bit of luck and right timing and right place, right time. I was studying finance and value investing really, really closely, kind of my later years of high school.
Value investing.
And I started studying a bit of macroeconomics. I've always been kind of a nerd and hyper-focused on one thing or another, and my freshman year of college, which is dating me a bit. I'm a young guy, but Zoomer indeed. Was COVID, right? So at the same time as I was kind of reading about these Bitcoin crazy people were saying all these things like they're going to print trillions of dollars and these outlandish predictions, and the smart people in the room, the Warren Buffetts and the Ray Dalios, were saying, well, Bitcoin is rat poison or it's a fraud or whatever.
I remember that.
And all of a sudden, I get sent home. I get sent, put on Zoom University, and I'm watching CNBC of the world, and they're saying, Jerome Powell's going on and saying we're printing, infinite money. There's infinite money at the Fed.
Yeah.
And so I'm sitting there as a broke college kid and saying, what is going on? Maybe those Bitcoin people weren't so crazy. And so that's what's kind of sent me down the rabbit hole. And, it's been a, 5-6 year journey from there to today.
Wow. Yeah, that's impressive. How do you remember how you got introduced to Bitcoin? Particularly, or
I think, as an extended family member, participated in the ICO craze, and people. I think the younger generations, Gen Z, millennials, even Gen X to a certain extent, but I would say definitely Gen Z. A lot of people, like, if you kind of already are familiar with the system, like I went in, I learned Bitcoin before I learned Keynesian economics.
Yeah.
And so
that's amazing.
When someone says, oh, inflation is 2% because that's how it is, I didn't have that sort of preconditioning, and I think so it wasn't something I just wrote off.
So you weren't suspicious of Bitcoin when you first got presented it?
No, it was just digital money, right?
It's young people.
It was something that I didn't know what I didn't know. I didn't know mine. I knew no details. Didn't understand how anything worked, but it was intriguing. And I think also there's sort of like the Gen Z counterculture rebellion sort of mindset. If Warren Buffett's saying it's rat poison, it almost makes me want to learn about it.
Exactly.
Right?
Yeah. So there's this famous quote. I always forget who it's from, but it's I really do think it's applicable here, which is technology is what is created when you're basically an adult in your lifetime. And so I would say for a lot of young people, Bitcoin is not technology because they came into the world and it was kind of already there. And so there's no suspicion around it. It's kind of like for kids, no one's suspicious of a credit card or the cash. But my parents sure were, right? They were super suspicious of credit cards.
Yeah, it's like, look, we grew up on Apple Pay and an iPhone.
Yeah,
so you're telling me that because you can't feel your money, I haven't held cash in 5 years, or 10 years. Like, why would that be a difference maker?
Exactly. Cool. All right, so you're the director of Bitcoin strategy at Metaplanet. What does that mean, please? What do you do on a day-to-day basis?
Well, it varies. Kind of a lot of different roles, and it changes, day to day. But it's everything from capital raising or kind of trying to map out what the future holds, and it's really tough to game plan with a volatile asset, with a volatile equity, and a volatile fundraising cycle. But sort of scope out what is our aim, what is our intention, how can we achieve that, raising capital. Once we get our hands on the capital, acquiring the Bitcoin, custodying the Bitcoin. I mean, the most important thing for a a Bitcoiner or a Bitcoin Treasury company is after you get it is don't lose it, right? That's the
Yes,
number
yes,
one,
yes.
cardinal rule.
Right.
And so, when there's billions of dollars at stake and you have a fiduciary duty to get things right.
Yeah.
So we put a lot of time in sort of that prospect, but I think outside of just acquiring the Bitcoin, it's not like we're just, sitting on our hands. Our intention is to sort of utilize that Bitcoin and leverage it to our advantage.
Are you trying to earn yield on it?
Yeah, so we have two sort of buckets. We have our kind of a long-term hold. We have 30,000 Bitcoin, approximately, a little more than that. And our aim is to eventually, hopefully, own 1% of it, and we're pretty confident in our trajectory to do that. Last year at this time we had about 1,000 Bitcoin. So we've raised $3 billion of equity this year. But we have our long-term hold. And then we have, which, we're not selling options. There's no derivatives. Bitcoin can go to 1 million or 0, and our position is not going to change there. But then we have our our income generation portfolio or bucket. And so that's where we're selling volatility. We're very active in the options market. We're probably one of the largest sellers of Bitcoin volatility.
Oh, interesting.
And so, in the third quarter, we made about $17 million of premium from that business. And so it's sort of a dual-pronged strategy, and our intention is to utilize that income portfolio to pay our preferred dividends. And so really, what is the big idea for us? The big idea is not just to hold Bitcoin. Anybody can hold Bitcoin passively. Our idea is to capitalize on Bitcoin as a volatile asset. Our common stock shareholders want amplified Bitcoin exposure, so volatility on the upside and the downside. If Bitcoin goes down, our stock is not going to perform well, and we're underwriting that. That's a base case. But if Bitcoin goes up, we want to outperform it, and so our intention is to essentially be levered long Bitcoin, but in the right way. And so we think the big idea is the perpetual preferred equity strategy, and Michael Saylor has pioneered this, but essentially issuing fixed income into the Japanese market at a low cost of capital, the lowest in the world, to acquire Bitcoin. And so, we just issued a 4.9% perpetual preferred instrument. So it's like, would you take $100 to pay back $4.9 a year and never pay back the principal?
Right.
It's a pretty good deal.
Yeah.
And so we're doing that, but we're acquiring $100 of Bitcoin upfront on day one.
Right.
And so if Bitcoin performs like we think it might, then on a 10-year time frame, you pay back $49 of dividends, but you have maybe $1,000 of Bitcoin.
Right.
And so that's sort of, our strategy is some people want low volatility, low risk, fixed income, margin of safety. Some people want hyper volatile Bitcoin exposure with high upside. And so because there's different sort of investor demands or, different allocation targets, then we can tailor, varying levels of risk and return to various investors. And ultimately, the biggest pool of capital in the world is fixed income. So our goal is to be one of the biggest issuers of fixed income in the world and in the Japanese market.
Yeah, definitely. Okay. So
I threw a lot at you there.
No, you definitely did, and I'm a mouth breather, so it's going to be difficult. But all right. The first thing I have to ask was near the beginning of that is so the custody issue.
Yeah.
I'm just curious for myself. Is this custodied in Japan or is this custodied outside of Japan? I'm just curious. I don't know if you can tell me or not, but
yeah. So we have subsidiaries in the United States and in Japan, and so ultimately I think we want to there's a sort of a jurisdictional diversification argument there, and a lot of the leading service providers are in the United States or internationally, but we are active in both. Yeah.
Okay, good. And the second one was, so yeah, you talked about like borrowing in yen is very, very cheap, and it always has been, but it started to go up a little bit in the recent, I don't know, Q3, Q4. Has this changed your strategy at all? Has it modified what you're doing, or is it still just so low compared to the rest of the world that it doesn't really matter?
Yeah, so the long end is really sort of, so the 20, 30-year bonds have gone from like 1% to 3%. It's really actually similar to what happened in the United States from like 2021 to 2022, where the long bond, the yield went up, the price went down. But no, it hasn't really altered our strategy. The short end, right, like the 1-year Japanese government bond is still like very, very low. It's like, less than 1% approximately.
And that's where you borrow mostly?
Well, so a perpetual preferred instrument is technically perpetual, right?
Okay.
So it's long duration.
Yeah.
But we can sort of design or, engineer these instruments to behave like either a long duration bond or like a short duration instrument. So for example, Michael Saylor has a 5 different perpetual preferred instruments.
Right.
One of those is STRF.
Right.
So the dividend is fixed, right? And so if you have a bond, the reason that 30-year government bonds are volatile, but a 1-month government bond is not volatile. There's like no volatility.
Yeah.
Because if you think of it, if you have 30 years of payments baked in, and the risk-free rate goes up or down.
Yeah.
Well, the value, the net present value of those 30 years of payments changes drastically.
Yeah. You don't know 30 years out. It's like hard to price.
So if you locked in, a 2% yield, but then all of a sudden rates go to 4%,
exactly. Yeah,
then you hemorrhage a lot of value there.
Exactly. Yeah.
And so there's instruments that have a fixed payment are volatile in price. But if you instead optimize for fixing the price or having a stable like price, you can have a variable payments, right? So Saylor came out with STRC, he's calling it stretch, which is a variable rate dividend. But the price stays right around 100. So if the price is above 100, he cuts the dividend. If the price is below 100, he raises the dividend. And so this is like sort of like a Bitcoin-backed treasury bill. It functions essentially like a 1-month government bond backed by Bitcoin, even though it's a perpetual instrument. So we have announced we're calling it MARS, Metaplanet Adjustable Rate Security. And that we think is the biggest kind of total addressable market for us. Japan is yield starved. There's no yield. Money market accounts have made a huge comeback in Japan this year. It's made a ton of noise. Money markets are paying 50 basis points, 0.5% in Japan, and everybody's excited about it. And so we think the opportunity is we can give you essentially not technically a bank account, but a quasi bank account that's listed on the Tokyo Stock Exchange that pays you 10 times more than the Japanese government would, or the money market would.
Right.
And we use that to funnel into acquiring Bitcoin.
Why have money market funds exploded in Japan this year?
Because interest rates have gone from 0 to 0.5.
Okay, I see.
It was a bit of a satire comment there.
Yeah, no, I got it.
But everybody is excited about 50 basis points.
Yeah. I mean, well, older people.
Yeah.
I live in Japan, so.
Oh, okay.
Yeah. The younger people I speak to are not.
Do you speak Japanese?
Very poorly.
Okay.
Matt over there, he's a translator, Japanese translator.
Probably better than me.
You probably speak better Japanese than me. How much time do you spend in Japan?
A few months a year.
Yeah. The jet lag is killer.
Yes.
Okay. I want to talk a little bit about MNAV, right?
Yep.
Like this gets a lot of headlines, and I was just wondering, how do you think about MNAV? How does it figure into your daily job of strategizing for Metaplanet? So just a very open question like that.
Yeah, so it definitely informs our capital strategy. So over the summer, but really over 2025, we raised $3 billion of equity. About $2 billion of that capital raising was at the market, and that was at MNAVs, or a price to book of 4, 5, 6, 7. All the way back down. We're trading right a little bit above 1x MNAV right now. And so, when you're selling equity above at a premium to book value, or an MNAV above 1, it increases your Bitcoin per share. But if you do it below, it's destructive. And right, so we've paused on the common stock issuance, but this is why we're really excited about preferreds, because when you're selling common stock, how accretive or how much value is generated by that capital raise is 100% directly correlated to your MNAV.
Right.
But preferreds if you have a non-convertible preferred, there's no conversion to common stock. There is zero correlation with your MNAV. And so this is a tool that we think of kind of using to, in a bear market, or using when the equity markets, the common stock equity market is not as enthusiastic. And so, regardless of if our MNAV is here or here, we can utilize preferreds as a way to acquire more Bitcoin or to raise more capital.
Right. Do you think over time, most DATs Bitcoin Treasury companies? I don't want to sully you with all the other the riffraff. Do you expect over time just to MNAVs to kind of drift closer to 1? Because I feel like a lot of you have a lot of people who are maybe not very sophisticated in the market, and they got overreacted into it. But as people realize what Bitcoin treasury companies are, then they get a little more sophisticated about when to buy and when not to buy.
Yeah, I sort of view, I mean, there's a lot of different varying thoughts on MNAV in the market. Some saying it's a sentiment indicator. It may be a more sophisticated take is it's a market's expectation for future growth or future increase in Bitcoin per share.
Right.
Right. So an MNAV of 2x would imply that you're going to grow your Bitcoin per share by 100% over a given time period.
Right.
Whatever your time horizon is. And so I think, really there's going to be a bifurcation between, quality and,
Yeah.
not quantity, but the rest of the field maybe.
Okay.
So, just an anecdote. We've probably had 200 institutional investor meetings, roadshow meetings over the last couple of months. And what we heard from a lot of, the feedback we heard from a lot of these investors is, we love your story. We saw your name in probably 100 different pitch decks or pipe investment opportunities saying we're the next Metaplanet, and we're at 1x MNAV, and Metaplanet or strategy is at a 2 or 3 or whatever x MNAV, and so we're cheap.
Right.
And the actual reality that happened was, these pipes would unlock and there's no liquidity.
Yeah.
And so I think there was sort of a kind of a value trap where, a lot of new companies came, they had an initial spurt, initial volume spike, some excitement, but then there was no follow through. Right. And so if you're an investor in the United States, you have to ask whether company XYZ or whoever, can you reliably compete with strategy? Or, a lot of fixed income investors, they need size, right? Like something that's even 100 million, 200 million, 500 million, it's way too small.
Yeah.
Right? At a couple $1 billion right now, we're at 3 billion and change market cap. We're just kind of at the lower end of being sizable enough for large, sophisticated institutional investors to be able to put real capital to work.
Right.
And so, the bottom, or not the bottom, but after the first few large Bitcoin Treasury companies or DATs, it's tough to compete because, the capital pools need size and they need liquidity.
Yeah.
And so I think there is going to be sort of a distribution and a bifurcation between the winners and everyone else. And I should clarify that I think it's absolutely a valid strategy for an operating company to capitalize on Bitcoin. Mm-hmm. I think it's a rational strategy. Mm-hmm. But I don't think the world that there's going to be 100,000 companies that are purely focused on capital raising and acquiring Bitcoin and sort of spinning this flywheel. I think the market got a bit ahead of itself.
Too much fragmentation, I guess.
In the summer. Yeah.
Yeah. Gotcha. Okay. So you said that you were talking with lots of investors. Are these like Japanese investors? Are these from other countries as well? Like who are these investors that are like talking to Metaplanet?
So global institutional.
Yeah.
And so, the interesting thing, and you could maybe perceive this as bullish or bearish, and I think it's bullish. But our story so far to date has predominantly been, it started as Japanese retail, then it kind of became U.S. global retail as well. And over the last, say 9 months, it's really been, it started to become a global institutional, U.S. institutional story.
Interesting.
The Japanese institutional crowd, I don't think it has anything to do or reflection. It's not a reflection of Metaplanet. It's just that Bitcoin is still sort of in this gray area from a regulatory perspective.
Oh, really?
It's technically not a financial asset. It's like sort of.
Is it not a commodity? It's not a commodity either. I don't know.
Yeah,
I should know. I live in Japan.
The kind of analogy or the the thing I like to use to describe the scenario is when the IBIT ETF came out in January of 2024. MicroStrategy had a MNAV of like 1.3x, and the dominant narrative in Bitcoin circles, again, the people that are posting about Bitcoin every single day, talking about this nonstop, was, okay, well, the story's over, MicroStrategy, there's no need for it anymore. It's going to go from 1.3 to 1.
Yeah.
1x, right? The premium's gone. What happened was it actually went from 1.3 to 2.5. Why? But not just because Bitcoin's price went up. That's, again, MNAV is relative to the Bitcoin value.
Right.
So against its Bitcoin value, it appreciated significantly. Why? Well, I think it's because for a while, Bitcoin was this gray zone, and then all of a sudden Larry Fink and BlackRock put a stamp of approval on it, and all of a sudden the career risk is wiped off.
Right.
So we actually don't really have any significant Japanese institutional investors at the moment.
That's what I was going to ask.
And I think, once there's a lot of things that people like to paint as bearish catalysts for Metaplanet. What happens when an ETF shows up in Japan? There's no ETF. And people say, well, that's really bearish. And we think it's the opposite, actually. And we're encouraging this adoption because once an ETF goes live, the institutional floodgates, I think, in Bitcoin in Japan open up, and I think that's going to be beneficial for us.
That I agree with 100%. I'm just taking notes to clip that one. Yeah, absolutely. I mean, obviously Japan's very conservative, and nobody wants to be first. Nobody wants to be first on that. Okay, so you think that so the institutions in Japan are still like very, very, very shy about Bitcoin, and obviously don't want to buy it yet, really, in any kind of size.
Yeah, I think also just like what we're doing is very radical. Traditionally dilution is bad. Common stock investors avoid dilution at all costs. And for us, we're saying, well, no, this actually can be a tool,
right? And
we'll utilize it if it can accrue value to the shareholder. So, we've grown our Bitcoin per share, regardless of the Bitcoin price. Our Bitcoin per share has gone up 500% year to date. So, you started in January. There's now, 6x more Bitcoin per share for the same share.
Right.
Right.
Okay.
And so, if you're an investor and you like Bitcoin, then Metaplanet Equity can make a lot of sense for you. I think, something to note is you can be really bullish on Bitcoin and be a portfolio manager. That doesn't mean you can buy Bitcoin.
Right. Yeah.
You're a portfolio manager. You can only buy United States medium cap stocks, or maybe you can only buy Japanese small caps, or whatever. And so you're a portfolio manager. You love Bitcoin. It's a side passion. You can't allocate anything to it.
Yeah.
All of a sudden, an operating company comes around and says, "Hey, we're going to accumulate Bitcoin. Bitcoin's our denominator. It's our benchmark."
Yeah.
And so that's the kind of the power of the Treasury company model, right? So we can say, "Hey, here's a fixed income instrument backed by Bitcoin with Bitcoin upside." That doesn't exist anywhere else.
Right.
And so I think that once the kind of the institutional landscape on Bitcoin in Japan further develops, and we're doing everything we can to push that forward, we think it'll be a big tailwind for us.
Nice. All right. Just two very quick last questions. You have to give long answers. Just curious about your take on these more topical things. 4-year cycle, is it dead?
I've never, I think it's too simplistic of a framing. I don't think the 4-year cycle
was ever a thing to begin with.
I think the halving mattered, in 2012 and maybe 2016. I think since probably 2020, it's been predominantly a macro-driven, cycle, and so, it's dollar liquidity, rates, the bond market, the equity market. These are kind of the big macro drivers, and you could, as much as you could plot the halving cycle and Bitcoin price, you could plot like PMIs or other macro indicators, and it would kind of map in the same thing. So it's like, I don't know. We're not, Metaplanet personally is not looking at the 4-year cycle to make any informed decisions.
Right.
I guess that's probably the easiest way I could say it.
Nice. Okay. Dead. All right. Last question. So I would say privacy in the second half of the year really became a major narrative in 2025. I didn't see that coming, but it did. Do you think privacy is important for Bitcoin? I talked to Aaron Van Weerden, and he was like, yes, it is. It kind of surprised me a little bit. I'm trying to ask Bitcoiners if they think privacy for Bitcoin is important, because it's pseudonymous, but not exactly private.
Yeah. So, I can wear a couple different hats.
Okay.
If you're talking to Dylan, the head of Bitcoin strategy at Metaplanet.
No, I'm talking to the crypto Twitter follow that I have. Yeah.
Well, I'll say,
following Twitter.
So from Metaplanet's standpoint, we do proof of reserves, right? And so we're actually trying to be radically transparent.
Yeah.
We're saying, here's all of our Bitcoin addresses. You can track it real time. You can go to metaplanet.mempool.space and see all of our Bitcoin. We're showing it to you. We're showing our cards.
Very cool.
Dylan, the cypherpunk sovereign Bitcoiner, absolutely thinks privacy is essential. I think the cutting edge of kind of cryptography and sort of that privacy tech is absolutely something that we should be, open-minded to. And, ultimately Bitcoin wins because of white market capital, but also black market use, right? The fact is Bitcoin is for enemies, and I say that it's sort of a cliche, but this is a tool. It's open source. And the real power of Bitcoin is no one can stop you from using it. And so just like anything, any tool can be used for good and it can be used for bad. And there's no denying that. But privacy is something that is really, fundamental.
Yeah.
And I think that this is going to be something that, is going to be worked on and hopefully improved over time.
Yeah, I want to be able to pay my barista and not have her see how much money I have.
Lightning is not too bad,
Exactly,
but there can always be more improvements.
Yeah. All right. Well, thank you very much, sir. Thank you for your time. I appreciate it. I hope we can speak again at some point, maybe when you're in Japan.
Yes. Cheers.